The Treasury just announced that they're going to double up their buybacks on bonds. So basically, they're saying that there's cracks in the bond markets, and that's going to be dumping a bunch of liquidity back in the market. So it's not quantitative easing.
50% of NVIDIA employees have a net worth of 25 million or more. Like, it's insane, and it's like absolutely incredible.
It's not delivering the outcomes that you were promised for working hard. You don't see a path. You're going to want to burn it down.
It's a very different picture now for someone like my esteemed co-host Halston, looking at buying a home. It's not the wealth generator it used to be. And so there's a lot of problems out there.
A lot of the political challenges that we see in this country are downstream of the homeownership problem. So if you can't afford a home, you're going to get mad at capitalism.
Cause we pop them like overridden vodka. C3, okay, a millionaire. I'm a young money millionaire.
Good morning and welcome to Daily Stack. Today we have Brandon Keys, Green Candle podcast. I think one of the most plugged in guys in media in the Bitcoin space that you may not have heard of if you haven't listened to the podcast. So go check it out. Halston Valencia, my co-host, is here this morning. She's an exciting job. Hopefully we can get some updates from that as well. Most exciting thing is things are moving. Bitcoin is holding that 80K this morning. It's back up there. Strive or ASST is back up. We feel good about, what we put our money on the line on. We have conviction in Strive. So don't want to steer the audience wrong. How are you guys this morning?
I'm great, man. Hey, 80K. Yeah, you can't be upset when we see this little pump like this, right?
Absolutely not. You cannot be upset.
So today, want to dive into a few things. I think, first, do you think we're back? Is that the first thing? Is this where we're actually going to hold? Is Bitcoin solidified? Some people have been saying it's we're still going to encounter debt problems, but as we saw in 2020, I was wrong. I thought we were going in some recession, but the money printer really does flood the entire market with liquidity, and everything pumps faster than you can imagine. Don't fight the Fed is the saying that they've hammered into us.
Yeah, I think four things that are really interesting just happened. One, obviously, a bunch of shorts just got liquidated. So anybody that was short on Bitcoin, I think it was the biggest short liquidation in Bitcoin's history, or pretty high up there, just because of all the derivative products that we've had. So we had that happen, right? And then Trump came out and said, that they're still moving forward with the strategic reserve. He didn't say that they're going to buy a lot of Bitcoin. I know that got kind of circulated on Twitter. But I think the real reason that this pump happened was that the Treasury just announced that they're going to double up their buybacks on bonds. So basically they're saying that there's cracks in the bond markets, and that's going to be dumping a bunch of liquidity back in the market. So it's not quantitative easing, right? They don't want to call it that just yet, but it's kind of pseudo quantitative easing. And every time that we see that, it usually flows to the most liquid asset, which is Bitcoin. So we see all those three things happening. And then something interesting happened with China as well in the past month and a half or so. I don't know if you guys have really caught on to that, but they basically cut off, a lot of their people in the country, basically their ability to buy gold. So they kind of elevated those paper markets in a sense. So they cut that off, and then China also came to the rescue when we had a bunch of the big oil shortages a few months ago from the Strait of Hormuz, and came in and just basically told us that they had a bunch of reserves that they hadn't been telling the people about, just necessarily all the Americans and all the other countries. They've never really disclosed their holdings. They've been kind of secretive. So I don't know. I've got this quiet theory going around here too, that if you look at what China's doing, they're going all in on buying the hardest asset, traditionally in gold, and then on energy. And what are those two things, right? It's Bitcoin. So who knows, they could be going into Bitcoin as well. So I think just a combination of all of those effects, have kind of made this Bitcoin price pump to where it is. And I think we're all feeling a little bit better, but is it a trap? I know a lot of people are out there thinking that. I think with the increased liquidity, it's, 80K is here to stay, but I guess time will tell with Bitcoin, right? You never want to get too ahead of your skis, to say the very least.
Yeah, no, well said. We've definitely seen some crazy things in Bitcoin in the past. I think all of what you just said is very true, and lots of those things were amplifiers. I think Besant is really what, knocked the first domino over. But yeah, I think I want to say we're back, but at the same time, you just never know. You never know with Bitcoin. But it has been really nice to see. It's been really nice to see SATA hit par and stay at par for a few days now. And according to some treasuries.net calculations, they should be buying probably more than 600 Bitcoin this week. So that's pretty incredible just within the last 5 days.
Yeah.
And then we have Stretch almost at par, like basically within par range. So that's been really great to see. But yeah, tell us about, we were talking a little bit before the show. You said that you've been kind of behind the scenes, pulling some strings on some big YouTube names in the space. Tell us about what you're doing now and kind of just what you're working on next in terms of personal life, YouTube, all things Bitcoin media.
Yeah. So, I mean, I've got Green Candle where I'm making a lot of my own videos. So you guys feel free to go check those out over there. But yeah, in this past year, obviously we've been in a bear market, right? So sponsorships have been down. A lot of these Bitcoin companies, Bitcoin Treasury companies have been down. It's been kind of all quiet on the Western front. So I've kind of had to think, all right, what else kind of value can I add to the space? And so I've been basically helping a lot of probably, podcasts that you guys listen to, a lot of the personal channels that you guys have maybe seen blowing up here recently. We've been helping a lot of those people basically like improve their YouTube channels here to really take it off. So I think that Bitcoin for a while has had a decent marketing problem, to say the very least. I think a lot of people thought, I talk about Bitcoin, I'm going to get shadow banned, all these different things. I never think that is the case. I always think that there is some sort of solution. So I've been helping a lot of these companies around and people really just blow up on YouTube because there's just a lot that have gone into it. So, or that lot that goes into it, title, thumbnail, hooks, editing, all that kind of stuff. So started off Keys Media Consulting. And yeah, we've had a lot of success there, bringing a lot more views to our clients. And yeah, I've seen a lot of demand in the Bitcoin space for people, not only growing podcasts, but I think like personal brand is really big and important. And I know Halston, I've talked to you about this a lot, just as an aside. And, I think a lot of Bitcoin companies are kind of realizing that, like, even though the big motto is don't trust, verify, which we saw kind of blow up a little bit with this cold card thing here going the other day. But I think, a lot of companies are realizing, I want to create a personal brand to help elevate my company. Because at the end of the day, people want to do business with people opposed to just a brand or a face or anything like that. So I actually did a little bit of a rebrand myself as well. I've been, using Green Candle as kind of like a pseudonym type of thing for a little bit. Of course, I had my name on it, but I think I've kind of taken my own advice here with this and try to be a little bit more forward facing with things and bring things to the forefront. So I think a lot of Bitcoin companies are starting to realize that same exact thing. And I mean, you brought up, Sailor with Stretch. Obviously he's got a big personal brand that he's helping market. The digital credit products that he's building. Jack Mahler's another great example. He's built up his big personal brand, and Strike is an absolute powerhouse. So I think a lot of Bitcoin CEOs are seeing what's going on in our own space. And then if you look outside of it, like one of the fastest companies from $0 to $1 billion is Hailey Bieber's makeup brand. And I don't think she created anything extraordinary makeup wise. Maybe Halston, you could tell me differently. I don't know. But I mean, I think it's probably because she has, a couple million Instagram and TikTok followers. So as soon as she posts something about that, that's a good audience fit. And, that's why that company's valuation blew up the way it did. I mean, you can even go down the list, Jake Paul's, Prime, all these other influencers creating companies through that. So I think the age of maybe influencer just to influence and do all that is maybe reaching its end. And the new age of, I've got 15 years experience and I'm building this company. Here's why you should, trust with the product that I'm building or service that I'm doing is probably the new age of starting to create content. Because at the end of the day, social media is just a great marketing tool that you can use to really elevate brand, service, whatever it is. So yeah, I've been helping out with a lot of YouTube stuff and really nerding out on that. I actually took a YouTube accelerator from this guy named Patty Galloway.
Oh,
Who's
Oh
like
nice.
yeah, watched that
Mr.
video
Love
recently.
Patty.
Yeah, so he's amazing. So I did an 8-week course with that, and that's really just like taking my game, I think, to the next level.
That's awesome. Yeah, I think everything you said is very true, and I completely agree. On the Hailey Bieber note, yeah, she didn't reinvent the wheel, but the personal brand really, really helped with that. And I feel like nowadays, with all of the AI tools we have to really build anything you want, a website, an app, whatever it is, marketing really is kind of the choke point that a lot of founders are struggling with. And so I think, yeah, well said. I think we're definitely going to see a lot more CEOs, founders develop personal brands as their like organic marketing strategy. But I see your LinkedIn post all the time on your keynote that you gave. I think it was in Prague. Tell us about your keynote and why do you think that blew up?
Yeah, so the title of the keynote is why 0.01 Bitcoin or million sats is the new $1 million. So I think, a lot of people see that and assume it's talking about price action. But basically what I lined out throughout that entire keynote is there's 12.8 million wallets, I believe, that have 1 million sats. And there's 62 million millionaires in the world. And, every minute or so, there's 2 new millionaires created somewhere around the world, on average. And that's basically just, it's not my math either. That's what UBS, one of the biggest banks in the world, is saying. So basically the whole argument there was that the scarcity of Bitcoin makes becoming a 1 million sat holder, or, I don't know if Bitcoin millionaire is the right term, but a sat millionaire, so to speak, is becoming increasingly more difficult, especially with price actions that we see here. You can still do that for about $800, but becoming a millionaire is a lot easier. I mean,
Yeah.
I'm here in Austin. I mean, parents have bought houses like 10, 20 years ago, and then they see the price elevated. They didn't do anything to the house necessarily, and just the property value just drastically increased. So why is that, right? It's because the dollar that they're measuring in is just becoming, inflated away. So essentially that keynote, was talking about the 4 forces and kind of where we are and where I see it going. Mark Moss makes a great point there where he says that technology like Bitcoin moves in like 50-year cycles. So the first 10 years is usually like retail kind of coming in and all that, which we saw from about, 2010 to 2020 or so. And then institutions come in, which obviously we saw with Saylor. We're seeing, we're probably in, about halftime for all these products actually just coming in and getting developed. I mean, we saw a huge increase of these digital credit products coming out last year. And, they ran into a little bit of a hurdle, I think, at the beginning of this year. And it seems like they're starting to come back here now. And then, after that, we'll start to see governments. I think, we see El Salvador is really the only one that's really buying Bitcoin. We've heard Bhutan's mining. Maybe some other countries are secretly mining out there. And a lot of sovereign wealth funds are maybe going to IBIT exposure or something like that, maybe MSTR or what have you. And then, I think basically like 2030 to 2040 is when we'll start to see probably the first government really come out and buy or announce a buy. And then when that happens, that's when game theory kind of sets off. And then after that, the next decade is medium of exchange. And then the final one is unit of account. So my argument was basically we've had, 4 forces coming to buy Bitcoin, whether it's retail institutions coming in. We've got governments that have just kind of dipped their toe in. We have AI agents that are basically going to be working around the clock, providing value. So they're going to want to transact in something. And then lastly, we have, these digital credit markets, which we're still in the very early innings. I think, if it's they estimated like a $300 trillion market. I was doing the math the other day. I think we've got like maybe a couple 100 billion underneath those products. So it's maybe like 0.02% of that entire market. So we haven't even reached 1% of that digital credit market. So we're still in the very early innings of that. And so if you're a retail holder, being a millionaire, you could just sit on the S&P 500 and they're going to inflate that away. And you have a little bit more counterparty risk or real estate or something like that. But Bitcoin is something that you can truly hold yourself. And, there's that fixed supply. And we've never really had an asset like Bitcoin where it's truly a fixed supply and you don't need any verification. And I'm sure everybody listening here has heard that song and dance plenty of times. So that was basically the argument there, is that we have all these giant markets and we're still in the early innings, and it's becoming increasingly easy to become a millionaire. And I mean, I was watching some old movies the other day. In 97, I think it was, like one of the Austin Power movies, Dr. Evil came in and, tried to, after being frozen for a decade, tried to take the world to ransom for $1 million. And everybody laughed him out of the room because, $1 million wasn't a lot. And that was back in 1997, so
Yeah.
that was like over almost like 30 years ago now at this point. So, yeah, I mean, these jokes, they're supposed to like run its course, but that one is just becoming increasingly more of a joke as it stands. So, I think everybody intuitively has realized this, and that's why I think Bitcoin's going to gain a lot of popularity here in the near future.
Yeah, I think that it's interesting, kind of the cycle that you mentioned of how these use cases actually get adopted. And I know that there's been like, when the price of say like Strive, MSTR is down, people really like go hard at Sailor. You're looking for a punching bag when Bitcoin's, flat at 62K for a couple of weeks. And, the treasury companies are down even more. Some are selling all their Bitcoin and rotating out. So people are losing conviction. And people are like, Strive, you're just hiring podcasters. You had people, like they bought True North. But it's interesting now to see just like, I think when you need some education there, and you need people to get, go out and actually like get on stage and talk about it. And that's like the number one fear, is actually like getting up and talking in front of people. You obviously did it in Prague, and you have to have conviction. There's a lot of smart people in the room. So you say stuff that is you believe in, but also you're going to be concerned about looking stupid. And I think now some of that conviction is paying off for people, where it's like, oh, like digital credit's a whole thing. Some of it feels like marketing at the beginning, but now you realize that like so much of the market is sentiment. And one thing that I think is good about the financialization of Bitcoin and bringing it to the suits is that they're ruthless. Like, they're trying to make money up or down, long or short. And I think the issue with Bitcoin for too long staying by itself is that you don't have the shorts. You don't have people like Ken Griffin from Citadel or Stanley Druckenmiller, anyone that can actually be like ruthlessly say this is overvalued, and like has, the sober, pessimistic negativity to say, I'm going to make money because I think this is overvalued. And Michael Burry does that. And he looks really smart, during the Big Short, but it's healthy for markets generally to correct. So I think bringing some of these companies to the market, they call out when things get frothy. I think before, when, Bitcoin was just, a standalone small asset and wasn't, publicly traded it was traded 24/7, but it wasn't like this big liquid market. People could believe these narratives of like what Bitcoin should be. Should it be a medium of exchange tomorrow? Should it be store value tomorrow? Is it digital gold tomorrow? And that's not the case. It might take 5 to 10 years. It might take 40 years for all of these to really play out. And we're not, and we saw that like the market's going to punish you if you're way too eager and you're not listening to any kind of realistic adoption mindset of like how long it takes to people to actually use the product, use Bitcoin day to day.
Yeah, I mean, I think the reality is like a lot of people, see places like El Salvador, right? I mean, like a majority of their people don't have access to bank accounts. So sure, Bitcoin is a healthy alternative, right? I mean, they've had, I think they're moving to the dollar or like planned on moving to the dollar. I haven't really been keeping too much track with that, but you get countries like Argentina, Venezuela, who have suffered massive amounts of hyperinflation. So sure, Bitcoin's a better alternative, but I mean, I think what we saw with the cold card hack and the lack of the price movement from that happening is that majority of people probably aren't holding in self custody. I mean, obviously, I'm a huge proponent of that, and I think that's a superpower of Bitcoin that is extremely underrated. But I mean, with these big financial institutions coming out, right? I mean, I don't think Michael Saylor is, rolling a dice 100 times to hold strategies Bitcoin and,
Yeah.
really going through all that, right? They're using a trusted custodian, whether it's, somebody like BitGo, Coinbase, whatever, you name it. So I think, these bigger guys are just buying in billion-dollar increments, and the reality is retail is not able to do that and keep up. So with these new guys coming in, it's definitely going to change the market dynamics a little bit. So we've seen Bitcoin go down, obviously like 50%, but that drawdown wasn't as drastic as we've seen in years past. And who knows, maybe we still might go down to 50K or something like that. I don't necessarily believe that we're going to keep going down like that, but I think like it's just going to change the market dynamics and the sentiment overall. And once these Treasury guys start to come back, and the Treasury is opening up more liquidity, I think that's going to be all bets are off. And I think the reason why we saw a lot of people pointing the finger at the Treasuries is just a lot of that stuff moves a little bit slower. So in order to convince a board that you want to put Bitcoin on the balance sheet, you don't necessarily have all of that ability to just say, hey, you know what? We've got $1 billion on the balance sheet. Let's buy $1 billion tomorrow worth of Bitcoin. Like, you've got to go through approvals and things like that. And unfortunately, it was just a lot of bad timing. A lot of them bought close to the top and rode down 50%. And I think the original Treasury strategy was a lot of these guys were buying Bitcoin on the balance sheet and then planning on buying profitable companies to then help service that debt. And they weren't able to raise as much money as they originally thought, because Bitcoin was at 120K, and then they saw it, shut off basically when it dropped down 50% to 60K. And so they weren't able to service that debt. So they needed to sell Bitcoin. So, I mean, I think all the Treasury blow up, there's still going to be more. There's going to be a lot of people who are going to see this strategy, use it for profitable business, and it's just going to make everything better. But I mean, we saw it in Bitcoin's early days, right? I mean, exchanges blew up left and right because people were doing nefarious things on exchanges. So, all those exchanges that originally started off as, people believed as safe were not necessarily that. And, that's going to be the reality of some of these Treasury companies, is not all of them are going to potentially survive, but a lot of companies in general don't really survive either. So, I mean, it's not just like a Bitcoin Treasury thing. It's just, there's now more eyeballs on it because we have like a lot of the podcasters coming out. And so people can point fingers at it. But if people, paid close attention to these penny stocks or other industries, probably as close as they pay close attention to the Bitcoin Treasuries companies, they'd realize it's pretty similar in those market dynamics. And in fact, holding Bitcoin on the balance sheet might actually make you a stronger business in the long run. And, a lot of these startups that put Bitcoin on the balance sheet early on actually end up being more successful and have a lower failure rate than a lot of these startups that, maybe are just raising cash and just having it sit in a bank account, go dormant. So, I think it's just reality of where we are. Like, we are kind of in this Bitcoin bubble echo chamber, so to speak. And, once you see another company put Bitcoin on the balance sheet or something new come in, anytime anything goes bad, people want to point a finger at somebody. And, if you've been in Bitcoin for long enough, you'd realize there's a lot of cycles. So people just want to point a finger at somebody. So I think, Saylor selling the infamous 32 Bitcoin, which was just like such a small percentage of his overall stack. They just wanted to point it at him. But I mean, the guy's got 800,000 Bitcoin on the balance sheet plus, and what's 32 at that point? They've been buying well more than they've been selling, and I'm sure they'll continue to do that.
Yeah, I think it's easier to do now, at the current juncture. Like he said, rip the wings off shorts. I don't know if it was fully ripping the wings off of something, but it was good to show the market, they can be flexible. And I always made a comparison. We've talked about it with Halston before. Just like if you own a REIT, like I did a lot of like REIT analysis in college. I don't care if they sell properties or buy properties, like it's about performance and what's the thesis, and don't be emotionally tied. And I think two people are emotionally tied to investments. Up next, we got Ben Bear coming on. I'm hoping, Brandon, you can stay with us because you've got a few rental properties, but Ben Bear is founder, CEO of Turbo Home and Build Casa. Brandon, how are you doing today?
Great to be here.
Ben, how are you doing today? Sorry.
Yeah.
Brandon and Ben on the same show.
No, I'm doing well. It's great to be here. Thanks for having me.
Yeah, so we want to dive in. So we obviously we do a lot of Bitcoin stuff. We're a Bitcoin show, but we're also the Daily Stack is about you can't just buy an investment and you're just going to sit on it. I think like Brandon mentioned earlier, a lot of parents bought their homes for $150,000 and now it's $1 million, and it's a great return on investment because you also had to buy one and live in one. It's a very different picture now for someone like my esteemed co-host Halston, looking at buying a home. Avi, that's in New York, also is co-host, also looking at buying a home, and it's not the wealth generator it used to be. And so there's a lot of problems out there. So we're excited to talk to you about how are you fixing it? I know you're a passionate guy and you're going in and you're starting Turbo Home and Build Casa. Tell us about both of these.
Yeah, I mean, if you look at the math, it will always look better to actually invest in the stock market or crypto some years versus buying a home. And, the reality, though, is that homeowners do end up about 40 times wealthier than renters over time. And part of that's, selection effects, that people who are wealthier buy homes in the first place. But part of it is that, basically when you buy a home, if you don't pay your mortgage, you get kicked out on the street. If you don't invest in the stock market or crypto in a given month, nothing really bad happens short term, but in the long term, you don't save as much. And so for a lot of people, it's a wealth generator. It's also a way to feel like a permanent part of the community, like you're somewhere for the long term and you're really invested in what's going on. And it's just completely out of reach for most people. It's the most unaffordable housing market in the US in 40 plus years at this point. And so there's really two drivers of that. And we have two companies that are addressing each side of it. One is a lack of supply. So, we're millions of housing units short. What Build Casa is doing is working with small developers across California to find and identify parcels that are underutilized, that could fit more units than they have today. And what happened was there was a state law that made it a lot easier to subdivide parcels up to 4 to 10 times. That might be a single family house on an underutilized lot where you could fit 4 to 10 townhomes. So we act as an algorithmic identification layer and entitlement specialist that gets them permitted, and then builders build them. We incubated Turbo Home to solve the demand side of the problem, which is, our fees are 5 times higher in the United States than any other developed country. The UK is another example. And so there's just a ton of junk fees in the transaction. And we're in a world now where 80% of people are finding the home themselves using an app. They're researching the home online. I think about 50% of people are already using AI tools to analyze pricing and things like that. And so our insight was that if we could give people tools that had live access to MLS data, that had training to make sure that we weren't hallucinating when we were analyzing a disclosure report or trying to recommend price or recommend properties, but still have an agent there to help with the really high stakes negotiation and consultation and frankly therapy that's needed when purchasing a home, that there could be a market for that, particularly after this big real estate lawsuit settlement that occurred a couple of years ago, that caused more people to start to look for alternative options at a time when, even Redfin, which historically was the best deal, is only offering a 0.25% rebate. And so with Turbo Home, you get great AI tools, whether you want to use them on the web, mobile, or iMessage, but there's also a realtor there. And because it's a vertically integrated solution, we can pass the efficiency that's created by the technology onto the consumer. And so it's a low flat fee, average about $10,000. So on $1 million home, instead of the broker earning $30,000, you're going to pay us $10,000 at closing. You get that $20,000 back, which you can use to lower the interest rate on your loan, lower your cash to close, or even make your offer stronger if you're in the Bay Area competing against an Anthropic IPO person, and you want to be able to make your offer 2% stronger. You can funnel the cash that way. And so that's how we're thinking about it. Really building around the consumer first rather than the real estate agent. And traditional brokerages, the customer is the real estate agent, not the consumer. And so it's structurally a market that we thought needed to be shook up a little bit.
This week, there was a stat that came out. 50% of NVIDIA employees, which is a Bay Area company, largest company in the world, have a net worth of 25 million or more. Like it's insane. And it's like, they obviously earned that. Like, they've worked hard, and, they transparently playing by the rules. It's not like an oligarchy throughout history, but absolutely incredible. And then that's what you're going against. And I think it goes to show the K-shaped economy, that we see coming out. And people have talked about it, but I think it is playing out where, that's going to be one. NVIDIA employees is a very small cohort, but it affects a lot of people. So one thing I did want to dive into, because Halston and Brandon and I were talking about California and Southern California before, is let's dive into that particular ruling. And one thing I read, I don't know if it was a San Francisco based economic blogger, Noah Smith, that does No Opinion, or Noah Opinion, No Opinion. And he was talking about I think a year or two ago, because I used to live in San Francisco for 7 years. And he was talking about everything in the news. Fox News is all talking about San Francisco is it's super woke, and they encourage drug use, and that's why there's so many homeless, and it's purely driven by liberal politics. But he's look, I live in San Francisco. It's driven by housing. It's pretty simple. You have a 3-story house, and that's Victorian house in San Francisco. That's as much as you can have. It's look at Paris. It's a 5-story city. You're missing 2 whole stories across the entire city. And that's why it's a 750,000 person city, pretty small compared to New York, which has these massive high rises. What do you now, how is this regulation, and how are you shaking up the entrenched regulation that has prevented California from succeeding and really hurt the lower and middle income in California?
Yeah, I mean, the K-shaped economy thing is totally right. So there's only so many places that, people who are working at a place like NVIDIA, or even 2 tech income families, want to live. They want to be close to San Francisco or the South Bay if they're working in the Silicon Valley. And those places have gotten crazy. They're super competitive. We saw a house on the platform in Noe Valley that was 900 square feet. I think it was listed at 1.4. It's going to end up at 2.5. And so I think that it's going to be pretty wild in those places that are desirable to folks working in tech. It's slow almost everywhere else. It's definitely a supply problem. I think the other big problem in California is people don't sell their homes, right? And that's happening in the economy broadly. With folks who are holding on to low interest rates and don't want to give them up, less inventory than you would typically see. And that's why you're seeing home sales, sort of stagnating across the country, not in that 6 million range, but in that $4 to $4.5 million homes per year range in terms of what's transacting. The big driver of that in California is a law called Prop 13. So basically, I pay on my home in Oakland $18,000 a year in property taxes. My neighbor pays $1,000 a year because their property tax rates are capped at a certain amount per year, and so they never sell. And then you add in the fact that the interest rate environment makes people who have low rates not want to sell, and that people want to live here. The weather's great. You can make a lot of money. There's a lot of things to like about California. You have this cocktail. Which is really hard to fix. A lot of people have tried, but I think lowering transaction costs on the buy side and getting more than 100 units permitted in development on the build cost side makes it feel like we're at least doing our part. Although it's very early days. We've done about $500 million in transactions on the Turbo Home side. That is a speck on the side of the ocean in terms of the overall transactions. More than 90% of them are still using traditional full fee agents at 2.5% or 3%, depending on the market.
I was gonna let Holston if you want to jump in, but that's the big issue. Is like is I think on the regulation side, like if you're thinking about how fast you can push something, it takes a long time. And my grandfather was he had his law degree, but he's mainly in real estate. And that's actually one thing that I know, like I can remember that he fought was the tax freeze. It was like, why why do you have people paying the same taxes for 30 years? Like I get like you don't want to like it's very hard to go raise taxes on the elderly, if they've been in the home for a long time. But it's inequality. It's bred inequality, and this is in Georgia. And so like he was going to Atlanta, on a weekly basis fighting this in court. And he's like, the people that are entrenched that have bought a home are paying $1,000, and then you're coming in, and maybe you're like a first time, you're an immigrant, your first time, college educated person in your family, and then you're trying to buy a home, and then suddenly you got to pay $18,000 a year in taxes. Like that's not that's not a good market. It's a fixed market.
Well, and then I think a lot of the political challenges that we see in this country are downstream of the home ownership problem. So if you can't afford a home, if there's no path where you feel like you're going to be a permanent resident, where you should get involved, where your kids are going to go to school in that area, and you're going to be there for the long term, you're going to get mad at capitalism, right? Like it's not delivering the outcomes that you were promised for working hard. You don't see a path, you're going to want to burn it down. And so I think home ownership is really at the core of a lot of the strife that we're seeing, on both sides across the country. This feeling that you're behind and not going to be able to catch up. And I was fortunate to be able to buy in 2019. I do have a low rate mortgage. Speaking to the K rate thing that you were mentioning earlier, my house is actually worth less, even though I'm 7 minutes from San Francisco, than it was in 2019, just because it's, an emerging area. It's not a place that, someone from NVIDIA would think to live now, maybe in 5 or 10 years. But we really do need to find a way to restore that path to home ownership if we want it to get a little bit less polarized. I think it's really core to what's actually happening politically in the country as well.
Yeah, I completely agree with that. And, I'm 24, I graduated a couple years ago. And it's like, my generation specifically was told, and I think millennials were told this as well, every generation really in the States, you go to school, you go to college, pay for your degree, take out student loans if you have to, find a good job, and you'll be set. You'll buy your house, you'll live out the American dream. But I think a lot of what you're saying is also the core problem to the birth rates declining, because I feel like a lot of people don't want to start a family. They don't want to get married. They don't feel comfortable pursuing those things if they don't own a home. Men specifically, I feel like are guilty of that. And so I feel like, restoring that path is crucial to, like you said, solving the political issue, solving the birth rate crisis as well. What are you seeing specifically in San Francisco? I'm curious to know. I have a friend that just moved there and has been telling me like San Francisco is awful. All these young people just want like 30 is like the new 20 and 40 is like the new 30. People aren't settling down. It's like, I'm never going to find a husband. What is kind of the sentiment there? Have people just given up on, are they just nihilistic on that American dream? Or are you seeing a lot more of, all these tech people coming in with a ton of capital, trying to rebuild that dream over there?
I mean, I have friends that I'm in my late 30s. Most of my friends are married or either have kids or will soon. I was fortunate to work in a startup that did pretty well when I was like 22 or 23. The company ended up selling to Blackstone, and I was the VP of sales. And I wasn't a founder, so I made enough to get a house. A lot of my friends have gone on to be successful. Some of them are raising kids in the city. Some of them are moving out to Dublin or Marin or Walnut Creek or the places that are more suburban and feel more safe. I think big cities in general in America. I grew up in Pittsburgh. New York City, San Francisco, they're very transient places, right? Like people are coming out there to see if they can make it. Some do, some don't. And so you constantly have friends leaving, going back to where they're from, going to different places. And that is a hard thing in big cities in the country and might lead to some nihilism for some folks. But I definitely see people settling down and having families as they get older. Even in New York City, which is the biggest candy shop from like an attractive people everywhere you look perspective. I see people settling down. But that lack of like intergenerational connection, the amount of turnover that you see in people, the unlimited, sort of stress that people feel to make it economically, and then, the optionality that exists online and on dating apps, I think does destabilize a bit. But there are people making it work, both in the city and in the suburbs.
Well,
Ben,
that's
I
good
wanted
to
to
hear.
ask.
Go ahead.
I was gonna ask about what do you see with like really wealth building, and especially more on the turbo home side, but wealth building through like rental properties. We were talking, with Brandon a little bit about that before. He's based in Texas, and it's a normal way, historically, you've had people that don't have equity in a startup, like you mentioned, like a fast growing startup that gets bought by like Blackstone, but they're able to go out and they understand, I can buy another house, I can get a mortgage on it, I can go find someone to rent this out, I can do maintenance myself, and it's a really good way to build wealth in every market. Like it's over time, long term investment. What are you seeing from that front? How are you approaching that with Turbo Home?
Well, my co-founder bought 25 apartment units in San Francisco 2 years ago, and it's still fired up. That's how well things are going for us side. But it's hard to keep him focused because he's just so much richer than me now. But in general, like the scarce supply of San Francisco rental market has gone parabolic. It's starting to trickle over to Oakland. I'd say more broadly, like buying and holding rentals in California has not been a great strategy, in particular because people are looking to own real estate in California, right? It's like seen as a generational asset. And so, building to rent doesn't really pencil for the developers that we work with on the build Casa side, at least at the smaller formats. Like they need to build to sell, because, basically there are people willing to accept zero returns for the privilege of owning real estate in California. There's definitely places where, buying and holding rentals does work. Where I'm from in Pittsburgh is one of the highest yield rental markets. But what you often see is that there's sort of, something becomes clear and then, a bubble forms, right? And so like the Sun Belt kind of had this happen with rentals or Airbnb rentals, people who were leasing apartments even and then renting them out on Airbnb, sort of WeWork style from a business model perspective. There's going to be a lot of pain there. So it can be good, but you've got to buy at a really good basis and get in at the right price, and be in the right market where the spread covers the upfront cost. And I think the other thing about rentals is just, are you really willing to deal with the return on hassle, right? Because not everyone wants to be a landlord and deal with a shower bursting in the middle of the night that you have to call someone and go out and deal with. And especially if you're subscale and you're not renting close to where you are physically, it can just create a lot of hassle in your life. And so I personally don't own any rentals, but we certainly have people that have really good strategies. And I'd say really focused strategies is the key, like block by block, unit type by unit type, like a really strong thesis on a particular area, like my colleague Lucas had in Hayes Valley in San Francisco, to be successful there. But it's not something that I pursued personally.
Do you think that the rental market is gonna I guess like that type of thing is gonna change pretty drastically? Because I mean, I don't know, my rental properties that I have are in Tampa, and when I was buying a couple years ago, basically like the narrative that they were telling me is like, if you can make any money, like even like $100 or $200 a month on this rental, it's a win. Majority of people were just buying, either paying down significant amounts of the mortgage and the debt to get the payment low enough where the numbers make sense, or if you were just using like a traditional loan, it was basically very difficult, so you weren't able to like kind of do that. So do you think that that's, I guess, a sign that the overall housing market, at least maybe specifically in Tampa, but like globally or in the US, is a little overvalued?
Yeah, I mean, from a macro perspective, like I think people are always going to need a place to live, and we're in short supply in the places that people want to live. We probably don't have a housing supply if you count, sort of burned out towns in the Rust Belt that people aren't living in anymore. But in terms of the places that are desirable, where there's jobs, where people that want to live, we have a real supply shortage. There's also insurance factors and climate factors that are starting to roll through the housing market in places like Florida, even in the Berkeley Hills or the Oakland Hills, which are some of the most beautiful views that you can see of the Golden Gate Bridge in San Francisco, in the #1 job market in the country, are having trouble getting fire insurance, right? And so the state of California is going to have to step in. And so there are these macro global factors that are at play, but I think I don't think it's there's no chance that housing is going to go to zero, right? People are always going to need a place to live, and so long as the macro economy continues to do well, it'll flow through into house prices, because everyone when they get a bunch of money wants to buy a house, right? And so back to the San Francisco thing we were chatting about earlier, if you have 10,000 millionaires worth $20 million or more get created in a short period of time, and there's a limited supply of homes, you're going to see a huge inflation in prices, particularly now when I think the 5-day-a-week remote work thing is not the case for these companies, right? These companies are in the office minimum 3 days a week, often 5 days a week, because they feel like they're in this competition for the future of the economy, this big platform shift like you had with the internet and mobile and AI. But the feeling is this one's even bigger this time around. So structurally, there's a lot of challenges, but I don't think it'll go to zero. I think every person should ask whether owning rental properties is something that they want to spend their time and energy worrying about, basically.
Oh, got it.
How have you found with it?
No follow-up there. I agree.
Yeah.
All right. So I have to ask on, sometimes we can live in our own bubble of what we think is going to happen in the macro economy, but normally it's benefiting, Bitcoin in some ways as a hard asset. Ben, want to ask your question and take. This predicts one of our sponsors at the show. It's a Bitcoin-based prediction market. But this is around interest rates. And so we've talked about, and Bitcoin shot up some 62 to 80 in the last week. And a lot of that's been around the Treasury and Scott Bessent taking action and looking at the long, doing yield curve control, looking at the 30-year yield. Do you think we see from Warsh any action this year on raising interest rates? So because obviously interest rates are so impactful to the home buying experience, to how fast transactions happen on your platform. Where do you see interest rates? Where do you see some of this action happening at the Fed and Treasury level?
I mean, I think the higher for longer thing is definitely borne out. I'm not smart enough to predict exactly what the rates will be. I probably should be doing something else if I was in a year. But it does seem more likely that they're higher, 6 to 12 months from now than lower. And with 30-year mortgage rates hovering around 7%, it's definitely casting a pall on the housing market. And it's something that outside of those K-shaped places like San Francisco, the places that are doing really well, they are starting to see some impact. And maybe the benefit of that is some additional affordability, but the monthly payments are just so much higher as well if you're paying a 7% interest rate compared to a 3 or 4% interest rate. So it seems likely that they're going to be higher. I'm interested to see what happens with folks that sort of took out ARMs and maybe it was a 5-year ARM that they took out. The underwriting standards on those types of loans are a lot stronger than they were back in 2008. But there are a lot of people who were told the story that rates would be lower by now, right? And they're not.
Yeah, it's hard with the war. It's hard with oil. It's hard with S&P, continue to do well. But it's like the upper leg of the K keeps the lower leg from getting interest rate cuts that benefit them because they're just doing so well. I know we're coming up on time. I know some of us have to get back to meetings. Ben, I really appreciate you jumping on, Brandon, as well. It's really good to have a different perspective, and it's something that affects everyone. And we want everyone that is currently in the position of maybe they really have a strong conviction in Bitcoin, but you got to buy a house. You got to live somewhere. It's a hard asset. We think with currency debasement happening right now, there's more even traditional funds that are coming out of these big banks that are saying, hey, this is the investment thesis we have is around debasement. And it's like gold, silver, real estate, Bitcoin, anything that has some scarcity elements to it. What can you leave us with? How can like our audience get involved with Turbo Home? Is there limitations on geographies that we should know about or they should know about if they're looking for a house?
Yeah, so we're in California and Texas right now with more states to come. Website is turbohome.com, and reach out to us. You can try the app for free. We're actually free to use until closing, and you'll end up saving about $30,000 on average. And I think the stat I'm proudest of is that in the Bay Area, in the last quarter, we actually won about half of the offers, because it turns out that 2% economic advantage that we're giving you in the transaction, if you pass it through to the seller, is actually more important than whether your agent played golf with the listing agent a month ago. It's all happening over call, text, and email anyway. And we're really excited about the experience we're delivering. Most of the incumbents, like a Zillow, for example, their business model is to sell leads to agents. And so after you find the house, everything around analyzing it, touring it, making the offer, all of that has to happen in separate, disparate, disjointed systems. And so we are able to really unify that so that your real estate agent and your AI tools are all in one place. There's a combined chat. There's actions that you can take if you want to get disclosures, if you want to draft an offer, schedule a tour. No one's blowing up your phone, annoying you when you submit your information. We're just trying to reorient the whole process around the consumer and save people some money at a time when people need that extra money as well.
Yeah. Brandon,
thanks so much for the time.
Yeah. Appreciate you coming on, Ben. Brandon, we got to let you get a little last word in. What are you doing next? Where can we follow you? What's next for Green Candle?
Yeah, follow me at Green Candle. Check out the YouTube. My personal stuff, Keys Open Doors, everywhere. And then, if you're interested in anything helping YouTube wise or social media wise, reach out at Brandon at keysmediaconsulting.com. Just shoot me an email and see if we can help.
Awesome.
Appreciate having you
Thanks,
guys.
everyone. Yeah. We'll see you tomorrow at 12:30. I'll leave you guys with a quick ad read for our friends over at Ledin. They actually do tether gold, so they have gold and Bitcoin in the same account. So that's the new take on the debasement trade that they're getting into. But we'll see you guys tomorrow at 12:30. Bitcoin and gold side by side on one platform. Ledin now supports Tether Gold, and we're excited to announce them as partners of the Daily Stack Show. Every asset is protected by the same custody discipline that's safeguarded over $11 billion in client value since 2018. Your transaction account and loan collateral assets are never lent out for interest, never used to generate yield, and never put at risk to fund the business. The world's hardest assets with the flexibility to move between them. Explore what's new at ledin.io, LEDN.io.
Cause we pop them like overridden vodka. C3, okay, a millionaire.